What is going on, everybody? Welcome back to the channel, and today we have another installment into our beginner series where we get those new CandleMafia members up to speed with what we're looking at here on the charts to get you from not knowing what the heck you're looking at to having a pretty good idea of where price may go next. And today we're going to be talking about support and resistance, and even if you're not a new Mafia member, there may still be some sauce in this video that you can learn from, but mainly I want to focus on exactly what support and resistance is, how we can use it to find key levels where we can then look for potential trade entries. I'm going to talk about how I personally like to find my support and resistance levels when I'm just looking at the candlesticks. And then finally, we'll go over some tools that I like to use to assist me in finding those really strong levels that have a high probability of a reaction. So without further ado, let's go ahead and hop on into the charts and break down support and resistance for the Mafia. Let's get into it. So guys, here we are on the Bitcoin chart. And obviously, I think a lot of you guys probably know what support and resistance is. But again, this is going to be a video for the beginners. Now, whether you're talking about support or resistance, guys, basically all they are levels on the chart where we are going to expect price to react from. So if you have a level of resistance above you, this is where you're going to expect price to kind of hit its head on and then bounce back down. This does not mean that you can just find a level of resistance, come up to it, and then short Bitcoin to make a ton of money. Not all support and resistance levels are created equal, and we will go over what makes certain levels a little bit stronger than others. But simply put, for resistance, price will be underneath this level, and when you get up there, you're going to look at this as kind of like a ceiling where you're going to kind of bump your head on and either reject from or at least get a little bit of turbulence with some small pullbacks. But you're essentially just looking at this as kind of your ceiling. And then on the flip side, when you have a level of support, these are levels below price action where price has previously reacted off of, where you might have had a couple of bounces like this. And then when price comes back down to that level, you can then see, well, hey, price action got a little bit of a bounce on this level before. Maybe we will get a reaction here again. So simply put, resistance is going to be your ceiling, and then support is going to be your floor. Now, one other thing that's important to realize about support and resistance, we're going to go over this on the live chart as well, but if you have a level of resistance here, oftentimes, guys, when you break through that level, if price comes back down, you will oftentimes see that price will flip that previous resistance into support. So anytime you break above a level of resistance, you can look for price to get above that and then flip that level of resistance into support, and then that level of resistance simply becomes support. And same thing for levels of support that are broken to the downside. If you wound up losing this level of resistance and you come back up, we call this a bearish retest, turning that level that was once support into resistance. So pretty simple concept. You got ceilings and you've got floors. Sometimes if you wiggle your way up and you get above that ceiling, it becomes your floor, right? Kind of just like a house, right? If you're in a two-story house on the first floor and you see that ceiling above you, and you go to the second floor, that ceiling is now your floor. Pretty self-explanatory, but I like to break things down nice and simply for the Candle Mafia. So here we are, guys, on the actual candlestick chart. I'm in bar replay mode just for example purposes here, but when it comes to support and resistance, guys, if you're looking for levels of resistance, you're going to be looking at places where price got a rejection to the downside, right? So you can see here on price action, you got a rejection, you got a rejection, you got a rejection, maybe we get a rejection once more, and then you can see here we also got support, where we kind of form this little bit of a range. A big thing that you might hear people say is when you're looking for support and resistance, you want to look left. Basically what they're saying is you want to look all the way to your previous price action because that's where your support and resistance comes from, right? It's just previous areas on the chart where price had found support or resistance. So for example here, if I wanted to find out, hey, we're getting resistance here, was this acting as resistance in the past? Well, you can see last time price came up to this level, we did actually play around with this level and get a rejection. If we come on even further, you can see this level was also previous support. Remember I said, if you have previous levels of support, once you break down below them, sometimes you can come up and they can flip into resistance, and then we come down and then we reapproach this level and it's resistance once again, right? Pretty self-explanatory. You want to look left, where did price reject, where did price bounce from, and then you can use these levels in your current price action because oftentimes they are continuously respected. And right here you guys can see we did see a little bit of rejection here, and it is always important to realize, guys, support and resistance is oftentimes a zone. You can see here we did reject this exact level, but this is kind of a zone of resistance, right? We slip above the level, we come back down. We slip above the level, we come back down. It's not always going to be that exact line. Now, if I play price forward here a little bit, you can see we came up, tested this level once, we tested it twice, we tested it 3 times, and then finally on the 4th test, we wound up breaking above it and then flipping that level into support before continuing to the upside. So that is an example of resistance then flipping to support, right? So you have your ceiling here, and then you even have some support down here, price bouncing off that floor, bounce here, kind of front ran it there, but just generally remember it is going to be a zone. You get a little bit of a bounce from that support zone, right? So you have resistance, support. You bounce here, you reject here. You bounce here, you reject here, you bounce here, and then you come up, flip it to support, and then you get the breakout. Now, for me personally, guys, I don't necessarily just like looking randomly to the left to find previous levels of support and resistance. That is definitely something you can do, but I like to use certain tools to help me out. I'm going to go over that in just a few minutes, the exact tools that I like to use to find those real strong levels of support and resistance. But just for a general overview, anytime you come on into any area of the chart, very often when you see previous levels of resistance, for example, here we got a rejection, we came back up, we lost it, right? And then we broke above it, flipped it to support, and then it became support before we continued a little bit higher. This is just like a general overview of how you can look at support and resistance, right? You look left, where'd you get the previous reactions? Those are your levels. But again, like I said, I like to find actual important levels. You don't just want to look at every single level of support and resistance. And the way that I typically like to find my actual key levels of support and resistance is using something called top-down analysis. And this is where you start on the highest time frames and then work your way down, because like I said, the higher time frames will hold a lot more weight as far as support and resistance than the lower time frames. And the 3 time frames that I like to really look at for the key levels is the monthly, the weekly, and the daily, starting off on the monthly, going down to the weekly, and then going over to the daily. If you're looking for a trade on the 4-hour time frame, you're not going to want to be looking at a 5-minute support level, right? The higher the time frame, typically the stronger the levels. So I'm going to go ahead and start on the highest time frame, which is going to be the monthly here. I like to find where the bodies of these candles line up, and this is where I will mark out a key level of monthly support, right? So you can see here, I'm going to move the candles forward just a little bit, and you can see we confirmed this monthly candle, and I'm going to grab my horizontal ray, I'm going to hold down control on my keyboard, and I'm going to snap this level where the bodies of these candles line up. And what this basically shows us is price wicked down below this level in August, but then we came back up and we closed that monthly candle above this level. And then when we printed the new monthly candle in September, we actually slipped that level again, but we wicked back up and closed the body of that candle at that same level, showing us that this is clearly a level of support. Even though we went below it, we wound up building that support, which in this case is $58,954. So I'll simply go ahead and put that horizontal line there. I'll go ahead and click on this, come to my text, and I'll just go ahead and type M so I know this is a monthly level of support. And then I organize these in my object tree. If you don't know what I'm talking about and you don't know how to organize your levels, go back to the TradingView video in the beginner series. I explain exactly how to do that just to keep things nice and neat. But there you go. We have this monthly level of support now. So when I go down to the 4-hour, although I may have lower time frame support and resistance levels, I know if we come down to this monthly level, I know this is a monthly level, right? I know this is a high time frame level. This might be stronger than something like a 4-hour level of support or a 5-minute level of support. So if price comes down here, I'm going to be looking for a stronger reaction, or I'm going to put a little more weight on this level knowing it came from the monthly. And if we move price forward here, I'm going to go ahead and play price action. So if we come to this level, we would be expecting some sort of a reaction, because remember, although it might take some time to get down to that monthly level, if we do come down there, we are going to be expecting some support. And you can see there, we did wind up getting a pretty strong reaction directly from that level. So that's a monthly level of support. We come on down and you get the strong bounce. And we play price forward even more. And this is why I always say, you know, the higher time frames are going to hold a little bit more weight. I may be looking for price to come test these levels. And if we do come test that level, we're going to be putting a more emphasis on that monthly level, because we know those high time frame levels can give us a very large bounce. And funny enough, this is actually a trade that we wound up taking in the premium Discord. And that monthly was actually a part of the reason we took that long. Not just the monthly. Again, like I said, you want to look for something called confluence, which is when you have multiple levels all lining up in the same area. So we did have other levels there, but one of the big reasons was the fact that we had that high time frame level. We were looking for that long, and we wound up getting that huge bounce, making a bunch of money. So if I come back over to the monthly, I will then oftentimes mark this as a tapped monthly. I'll go into the settings and put a T in front of the M, showing that it is a tapped monthly. It doesn't completely invalidate the level, but typically the untapped levels are going to be the strongest. But if I were just going to continue to mark out these monthly levels, you can see we have another one right here where those monthly bodies line up. So I'd put another monthly level right there, and then you can see we have another one all the way down here. And then just to kind of hammer home my point from before, you can see all the way back here in 2021, we made a monthly level here at the top of the bull run, and you can see as we came up in this new bull run that we're in right now, we broke above that level, and we are now trying to hold this level as support. So another example of resistance turning into support here. But that is generally how I will mark out my monthly levels. And then again, like I said, I will put those in a folder, mark them monthly, but for now I'm going to delete them, and we're going to move on to the second time frame, frame, which is going to be the weekly. And we're going to do the same exact thing here, guys. You can see here we have a weekly level where the bodies line up perfectly, showing us that we've built support there. And then I'm going to go ahead and label this with weekly. And then on PC, going to hold down Control and then click and drag this level to copy it. And I'm going to go ahead and find my next weekly level. And you can see right here, we actually had a weekly level right here. And you can see once we got down, bada boom, we tap it and we get the bounce to the upside. And then we'll go ahead and move down here. We have another weekly level right here where those bodies do line up, so on and so forth. So then I would go ahead and label those all with W. I will just go ahead and throw these in a folder real quick, label them weekly, and then I can go ahead and hide them. And then the third time frame I like to come on over to is the daily. And these are going to be a little bit more local, just meaning closer to the current price action. And you can see here, we're going to use the same technique. Daily candle body closes right here. That is going to be a daily level of support. You can see we have another one sitting right down here. And then we also have a daily level of resistance sitting right here, so on and so forth. And I'm going to get into this in just a second, but you might have some lower time frame levels here, guys, that you might be looking at something like the 1 hour time frame. But what I like to do is I like to combine the lower time frame levels, and then I will turn on the daily, the weekly, and the monthly levels and see if we have any confluence at those key levels of support or resistance. But now let's go ahead and move on to some of the tools that I like to look at for confluence with these higher time frame levels. Because again, when I mention confluence, all I really mean is an area where we not only might have a daily level, but maybe there's a weekly level as well in that zone, and then maybe there's also a key Fibonacci level. If you missed the Fibonacci video, I'll link it in the card above. Basically, confluence is just an area where you have multiple levels of support or resistance, creating a high confluence zone for a high probability reaction at that area. Like I mentioned before, we actually did take a trade with the CandleMafia here from about $59,000. Before I actually show you how we use this confluent level for a potential bounce, I'll talk about some of the tools that I like to use to find those support and resistance levels. And number one, if you've been here for a while, you guessed it, it's going to be the volume profile, specifically the fixed range volume profile. I'll show you guys how to use that in just a second to find support and resistance levels. And then I also like to use the Fibonacci retracement levels. And these are very important tools to use to try to anticipate where you're going to get those strong bounces from. Now, one thing I do want you to understand is you have to actually learn how to use the Fibonacci retracement. Again, we have the video here in the beginner series for you, but it's not just about finding a confluent zone and then looking for a long. There is much more to trading than that. For this video, I just want to talk about how you could find the levels and how they react. So without going into a full volume profile tutorial here, guys, I'm just going to show you how to use the tool. If you want to learn more about the volume profile tool, I will also link a video above, and I'll actually try to put that video in the beginner series for you guys, so it's all kind of in one place. I'm actually going to come into bar replay mode to kind of explain this to you guys. I'm going to come on over here, and during this price action, guys, there was a range that we were looking at with the volume profile, and it was simply this little area right here where we got that big wick down, and then we kind of started to form a little bit of consolidation here, and I wanted to pull my fixed range on this area to find where our key volume levels were going to sit. So I'm going to go ahead and click on that fixed range volume profile. I'm going to select the range, and I'm going to pull it all the way to the current price action. We saw that we had a value area here, and with this fixed range volume profile, you get 3 support and resistance levels. You get the value area high, which is the high of that kind of range that you have, right? And then you have the POC, which is typically in the middle, not all the time, but typically is in the middle of the range. And then you have that value area low. And these are very, very key support and resistance levels because they're not just magic lines on the chart. They're actually calculated from the amount of volume that was traded at each individual price. Right now, they are support levels because price is above that range. So as we look at these key support levels down below, we're going to either expect a bounce from the value area high. If we break down below that value area high and turn it to resistance, we're then going to look at the POC. And then if we break down below that POC, we're going to look at that value area low. And these are going to be the 3 levels I would personally be looking at for a bounce. Now, here's the key, guys. We might be more likely to bounce off one of these levels. And the level that we would be most likely to bounce off of would be the one with the most confluence. My thought process is, hey, do we have any daily, weekly, or monthly levels that are confluent with these zones? Do we have any Fibonacci levels that are confluent with these levels? So what I would do here is I'm going to come on over to my monthly, weekly, and daily levels. I'm going to see if we have any confluence here. I'm going to start off with the monthly level, and you can see here, look at that. Our POC, which again is the strongest level within the volume profile, is also confluent with this monthly level, which is also a high time frame support level, which we know is also very strong. And obviously, guys, you have to understand the context of the market. In this particular situation, we were looking for higher lows and higher highs to come in on the market based off of our other analysis. But again, this is not a strategy video. This is just showing you how to get the key levels. But we have that monthly level here, right? And if we're looking for a higher low, oftentimes we get those higher lows to come in on local Fibonacci levels. And we had a local golden pocket in line with our POC and our monthly giving us a very confluent level of support. Right? So we can say, hey, if we come down here, this is a very strong level that we might be able to get a bounce off of. We have the POC, we have the golden pocket, and we have the monthly level. And then we also knew we had 2 daily levels right in line with our 786. So we have a lot of confluence here. Right here, we just have a value area high. Down here, we just have a value area low. But right here, we have 3 levels of confluence, and just underneath it, we have another 3 levels of confluence. And what happens? We wind up coming down here, and we put in a nice little touch into that zone right here with that confluent monthly POC and golden pocket, and then we wound up taking that long position and getting a big, big bounce to the upside, actually giving us a massive 17% move. So hopefully that shows you how kind of you could find multiple levels of support in one area to give you the highest probability of a bigger reaction to come in. It's not just a POC. It's not just a golden pocket. It's a golden pocket, a POC, and a monthly all together, giving you that superpower support level. Now, again, this is never going to be binary. If you have confluent levels, it's not always going to hold up, but it gives you a higher probability of a strong reaction. And even right here, guys, we are looking at this range that we have been in for quite some time, about 7 months. If I pull my volume profile here, you can see those key levels of support and resistance are holding up beautifully. This is why I love the volume profile, whether it's to trade or just find key levels of support and resistance. You can see we hold the low, acted as support, we broke it, but then eventually just wound up acting as support. Once we get back above it, it's support, we go up, deviate, flip it to support, we go back up, we come back down, flip it to support, get a move back up. And this was that 59K long I was just mentioning, guys. Not only did we have those local levels I brought up in that example, but this was also a macro value area low, which again was a high time frame confirmation on top of that monthly and that POC that we looked at with that golden pocket that we looked at. We also had this high time frame level. And this is how you can build out confluence. I like to start from the higher time frames and then move down to the lower time frames. It's called top-down analysis. So with all that being said, guys, I think that's all the time I got for today's video. I wanted to keep this one a little bit quicker. I do have some other support and resistance videos on the channel. You can go ahead, just search Frankie Candle support and resistance. They should pop up. But hopefully this gives you guys a good idea of not only how support and resistance works, but also how I like to find the horizontal levels based off price action and the tools that I like to use to find the key levels of support. Because if you're looking for trades, you don't want a long and short willy-nilly levels. You want to find those really strong key levels, especially if they're on a higher time frame, to expect that stronger reaction. And with all that being said, guys, that's all the time I got for today's video. So go hit TradingView, find your key levels of support and resistance using these techniques, and then go ahead and test out how well they work, find those confluences, and see how strong those reactions can be. That's all the time I got for this video. See you in the next one. Frankie Candles out. Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, we winning by a landslide.